So what are the kind of margins you're expecting to enjoy in years to come?
I think it's I think we've seen existing exchanges enjoying an EBITDA of 70%. We've actually gone in with the pricing where we've said that we want to price it optimally. So we're looking at something maybe 50% of that, and if you're profitable with even with reasonable amount of turnover, you're taking a long-term view. We're already profitable. Last year we were profitable. So I think the exchange is going the correct course, that you don't excessively go and operate on very thin margins. Simultaneously, you don't outprice yourself. So I think we've done a good balance.
Mr. Shah, coming to you, and the point that you were making about is how the market is not openly being utilized. I mean, one section, yes, if you look at the derivatives market is quite on, but the cash segment clearly has gone down in the last couple of years, more than so that we had seen previously. Do you think these are something that you can actually capitalize on as you make your strategies for the exchange?
So of course, on the equity market side, it's very, very important that we give a special focus for the cash segment. Also focus on which we have been speaking since very clearly since we got the approval, and even before that, that there has to be an approach to simplify where retail investor can understand. Derivative has an economic important role to play, 100%, but at the same time, you can't take delivery of a call and put options. So and the conventional interior India, when we want to penetrate class A city, class B city, it is so important that it has to be a simple product where one can give and take deliveries, and really some borrowing lending mechanism should also be there, which is there in the existing one, but we have to contribute in simplifying it. So that section is important. Second, fixed income section is also equally important. WDM as well as retail debt market. No country has delivered a successful infrastructure development without the debt market, and retail debt market is virtually in non-existence. So we'll play a key role. We want to play a key role, and I strongly believe others will also do, but size is too large, and others should do. If not, definitely we are geared up to handle that. Interest rate derivative is another one. Currency we are doing. SME we are doing. So if you see this, 87% of the market requires an fresh development approach. We are geared up. We are committed. We are long term. We know very clearly it's not in one day. It's a long term, and that's a way slow, steady, and solid.
Mr. Messi, while we are looking at, and there's an expectation that you would be coming out with vanilla benchmark indices and also sectoral indices as well, is there anything else coming in MCX-SX with?
No, I think indices, to begin with, we have a flagship index, then we will have sectoral index. We are working on a few more indices, but I think we will wait for these indices to get launched and stabilized. But certainly, this is one area where it is possible for us to create new products to meet the industry demand, and we will continue to work there. Obviously, on the fund side, business will get, once you have good indices, the fund players get into the market. So I think that would be the second strategy, to ensure that these indices are put to right use, and because there's a constituency of investor which only looks at this, so we will do that. This in the domestic market. How would we globalize these products later is the third strategy that will have to be. I mean, we have the strategy in mind, but I think it will just take some time.
Also, Mr. Shah, what's your sense on getting in the global players, FIIs? What do you have in hand for them to get into the market now?
See, they are the very key constitution of the market, and India needs them as much as we need our domestic savings to be channelized for the investment and the capital formation. Foreign institutional investors look at lot of qualitative parameter, and they bring lot of good practices, global practices, which only develop the market.
Mr. Shah, how do you look at the time of launching this exchange? Because most of the global analysts, economists are talking about a very good time coming in for India in the next couple of years. The global markets in the meanwhile are trying to find their base as well. The bad news quite a bit has been factored into the markets. How do you then see your coming 2 years, 5 years, 10 years down the line? How do you look at MCX-SX?
Wonderful question. We have been very clearly saying that we are not looking at from fixed market size, we are not looking a share. Market itself is going to expand, and on the inaugural also I said that the sentiment what Honorable Finance Minister has after the roadshow of the whole ministry along with him and the SEBI and the steps taken by SEBI has really changed the sentiment for India. India is now been looked again as with optimism, and global fund flow will follow. Again, the DNA of the group is very clear that we have developed markets where there were none. And whether it is electricity, spot, or the commodities or the currencies, We are fairly confident with this kind of conducive environment, with the right kind of approach on the cost, technology stability, and the you can say products with a vision of SEBI and the finance ministry. It's a fantastic time for India, and exchange will deliver along with even more players. India needs all-round development and will certainly contribute our bit.
Another important point really is the market makers. Has MCX-SX been able to identify those, and are they in place as of now?
We will be delivering on the market maker side. I think Mr. Massey will tell you in detail, but there will be an incentive programs which is permitted by SEBI, and they will enroll. But I think Mr. Massey can.
There is certainly a liquidity program which existing exchanges are using for derivatives. SEBI has now come out with a liquidity enhancement scheme also for the cash market, and we want to simultaneously launch both the schemes, and I think we will be shortly introducing it. It becomes applicable from the date we announce, 15 days from that day. So I think once the scheme is announced, people will get to know. It is geared with two focus areas. A, it should develop sticky business, and secondly, the beneficiary should be wide spectrum market. If we can really get the broad spectrum market to be incentivized, they'll come and participate, and liquidity will be more sticky. So I think we will adopt these two principles and increase this scale.
Another important area really is the new corporates coming and listing on an exchange. Are you in talk with those kind of companies as well?
We are already in touch with companies. We come out with a publication which actually goes out to the companies. So that way the listing department is in touch with them. We thought as a matter of strategy we should first focus on getting liquidity and stabilize the operation in terms of everyone's participation here. We are going to do reaching out for investor workshops all throughout the country. Once we have done that, then possibly this team will start engaging the business houses, the corporate sector, both for additional listing of companies here, plus new listing we will pitch for new companies also to come and list.
While there have been lots of demat accounts which continue to be open, last couple of years have given out good numbers, but the point still remains that much of the retail income or investment hasn't found its way in equities.
It's simple. Liquidity, credibility, and downside risk clarity. Once that has been explained and that has been established in your product, I think retail can definitely come, because everybody is looking an alternative to fixed deposit. But fixed deposit also has its own advantage. For that matter, gold has its own advantage. Same way, equity investment is not capped at certain things. Once you have products simplified, explain them well, it is available with lot of ease like demat. Retail investor can come, and it has to do a good financial literacy program in their local language. I think we have all that, and we have done it multiple times. We'll deliver in capital market also the same success.
Mr. Massey would want your answer on that as well. It's been a huge number, but the money hasn't flowed so well.
I think two things we think are to our advantage. First time since independence, the government and the regulator has become very focused on broad basing of market. We've not seen this debate in last 60 years. So I think we consider ourselves fortunate that we are possibly creation of this new view that financial inclusion is a mantra in the country, financial literacy is a mantra in the country, and broad basing of investor is for the first time being realized by the government, is causing concern for the industry to raise capital, is causing concern for divestment to take place. And it is with this backdrop that we saw two very important schemes come. One is the Rajiv Gandhi Equity Savings Scheme, and the second is the scheme which is meant for global investors to come inside. And I think in Europe there were studies done that the European community actually, the investing community expanded only when an equivalent scheme was launched there, and this scheme ran there for almost 20 years. So we are saying that in India we first time realized that people have to be incentivized because broad basing of market is paramount. That is being done. I am sure the scheme will get tweaked, and we know more banks will catch it up, more users will catch it up, and we'll see broad basing taking place. And the benefits that have to percolate with this scheme, I think, will come. Insurance industry primarily grew because there were tax saving benefit available to people. We see the same thing happening in equity market.
Exactly. I mean, coming back to your point, Mr. Shah, you were pointing out, we are in wonderful times. There are lots of reforms that are going through, a lot of disinvestment, and government really is coming out with incentives so that the market can grow, not the money that can keep lying in banks and stuff, but that can come into the market and contribute to further growth.
No, that's true. But at the same time, I wanted to demystify one thing, that when we really want to have a capital formation, the cash settle options, while they have its economic utility, Okay, a derivative serves an economic function, but definitely it doesn't contribute to this. So I am saying that unless we really focus on the capital formation products, retail investors are wary of the derivatives in that sense, and we can't say hence the fixed deposit is bad or gold is bad. Gold also serves an insurance against so many things. But yes, if it is important that it will channel to capital formation if there are right products available. And as an exchange, I think we have stated it first, and I think so far we are the only one who are really focusing on more or equally on that segment.
Mr. Shah, you are one player in the market who deals with commodity markets, currencies, and now with equities as well. With budget just round the corner, what's your expectation that could be coming in through for equities and then commodities as well?
I think for the equity markets, there are policies which are coming. For commodity markets, we believe that the cost of transaction should be lower, and the new things which should come on FCRA side. As an industry, I'm commenting beyond SX at an India level. I think all asset class cost of transaction should come down, beat currency, and they should be uniform, because if derivatives are to be done, currency market is trading $57 billion, okay, currency derivatives, and they enjoy a special tax structure also. So if you want a very good development on the derivative market side, the cost of transaction virtually should be as minimum as possible. There should be a taxation which should be very much common for everyone, and then in that case it will really contribute to the growth and development of the market, be it equity, be it currency, or be it commodity. But I think it is a must to have a all-round well thought out strategy and the policy, rather than having any ad hoc steps which can disturb or destroy the markets.
Mr. Mathew, also do you think there could be something in budget that could be coming in favor of FII's money coming into India?
I think I do not know on tax side how much would happen, but operational efficiency, yes, I think something could be done to make things easier. I think the international community has not been making much, I mean, though we've heard the debate on taxation, but it's more of ease of procedure in terms of getting money, and I think something would happen on those fronts so that people can get money with more ease.
All right, final question to you, Mr. Shah. This is about what is that one core thing, focus, where MCX-SX would be differentiated with other exchanges?
Growth and inclusion.
Those are the two mantras.
Gets a new direction at because of the MCX-SX, and the mantra of MCX-SX is very clear. Growth and inclusion is going to the model for this century's stock market. They have to be visibly and with statistics be proving that approach, and you have this century's major success stories all across the world.
Mr. Shah, Mr. Mathew, thank you so much for taking time out for us, and congratulations and all the best yet again.
Thank you very much.